Good morning, everybody. Thank you for joining me. My name's Tom Soane, and this is the Anonymous Landlord. And I'm doing a live broadcast as well. So if anyone catches this live video a bit later down the line, then thanks for joining. And if anyone's listening to me on the podcast, then thanks for joining. So today, I wanted to share some ideas on how you can improve your credit score. And this is really important because if you've got a good credit score, then you can get better mortgage deals, better bridging loan deals. You've got a better relationship with private investors. So I really wanted to share my story on how I improved my credit rating from literally crap up to as good as it can be. And I'll be honest with you, it was a bit of a test and fail and test and retest and monitor. But now I've got it down into a bit of a process. And my credit rating is now high and it was terrible. So I want to share that with you. So the things I'm going to work through with you here very quickly are number one, how I increased my credit rating to the highest it could possibly be. And the lessons I learned along the way there. Number two, I'm going to show you how your credit rating goes up and down, what affects it. What damages it and what improves it, and how you can use all of that to your advantage. I'm also going to show you the process that I now follow to keep my credit rating high, because it is an actual process. And then, do you know what? There's loads of reasons why your credit rating shouldn't be very good, and loads of reasons why your credit rating wants to get knocked down and knocked down and knocked down. So I also want to share with you a really important lesson of what I learned about my credit score too. Now, the main credit referencing agencies are Equifax and Experian. They're the big dogs. And the way they score your credit rating is out of either 600 if you're looking at Equifax or 999 if you're looking at Experian. So basically your score is just what they rate you and how you conduct your finances and payments and so on and so on. So along the way here, it'll be interesting to find out from anybody watching. Just comment below whether you've worked on your credit rating, what things have worked for you as well. Now, I'm just going to give you a quick story about where I came from with all of this credit rating stuff and why I'm doing this video. Because first of all, my credit rating was absolutely terrible. When I first started out in business, basically the business just ruined my credit score. I couldn't pay my bills because, you know, you start out in business, you haven't really got anything coming in, especially in property, where it takes a bit of time to start generating income. So a lot of my bills suffered. I lost my house, which had a mortgage on it, so that defaulted. I lost my car, which had a bit of finance on it, that defaulted. And it was a pretty tough time. I couldn't pay things like council tax and my utility bills. I had a credit card that I couldn't pay. And I just ramped up the debt and the missed payments and the defaults and stuff. And so my credit rating was literally rock bottom. And we're going back a few years now, but you know what? I think most business owners out there would probably remember a similar situation where you start in business, you're not really getting the money coming in because you're building, and then everything kind of goes a bit tits up. But look, then, so from that point, we even got a CCJ, by the way, for not paying a bloody parking ticket because I couldn't afford to pay it at the beginning, and then it just ramped up and escalated. It was pretty bad. So anyway, then the business started growing and my bills were getting paid and I was able to keep up with everything. But my credit rating was still rock bottom and I couldn't figure out for the life of me why. And it wasn't going up. It was staying where it was, even though I was starting to catch up on all the debt that I'd accumulated. I had a council tax debt. I had a credit card debt. I had utility bill debt. I had loads of debts. It was pretty tough. But yeah, so my credit rating kind of didn't really go anywhere and it just stayed pretty crappy. So I needed to do something. So what did I do? Now, as the business started getting better, I started having a much more reliable income. I signed up for Equifax and started monitoring my credit score much more closely because I was getting knocked back for anything I was going for. If I was trying to get, like I tried to buy a TV on finance, I just got declined. And it was so embarrassing. I was in that shop, it was Curry's at the time. And I was in that shop and, you know, I was all confident, really excited about getting this new television. And the guy said, no, sorry, it's been declined. And I was like, I won't swear. But, you know, I was really embarrassed anyway. So anyway, yeah, so I started looking at my credit rating in a lot more detail. And I started off by testing a little thing. So I started paying for every little bit on my credit card. Now, I only had a credit limit of 500 quid. So we're not talking big bucks here. But I started doing things like buying little lunches on my credit card, even if it was just over at Tesco's, grabbing a meal deal, 3 quid here, a couple of quid there. I was paying everything off on my credit card. And then about 3 or 4 times a week, sometimes more, I'd pay off my credit card. So what was happening was my credit card was getting up to about, I don't know, 20 quid, 25 quid, and then going straight back down again to 0. So I kept doing that. And I noticed that my credit rating just started climbing up and climbing up and climbing up. It was still gradual, but it was getting higher and higher and higher and higher. So I was paying that credit card off constantly and carried on doing that. But it was still going quite slow. It was only going up by a couple of points every I can't remember, every month or whatever it was. And then I started making sure I was leaving a load of money in my account at the end of each month. Now, that was quite challenging because I was still not making a great deal of money at the beginning of the business life, but I really wanted to try and grow my credit rating so that I could start investing, start getting into property. So I was trying as hard as I could to leave as much money as I could in the account as often as possible. And then that started growing my credit rating even more. And then when I started looking into this, I can see that there are other factors that were included in my credit rating, not just paying your bills on time. So I'll go through those with you in a second. But anyway, my credit rating started rocketing up. So I'm paying my credit card off 3 times a week. I'm leaving money in my account at the end of each month. And what they're looking at is when another amount of money comes in, am I living month to month, or could I survive for a few months? So that's what I was trying to focus on. My credit rating shot up to 572 out of 600 just by doing that. And it was really quick. I was so surprised at how fast I got my rating up. Now, so right then I'm thinking, this is going back now a few years, but right now I'm thinking, this is brilliant. Okay, I'm going to keep my credit rating high. I'm going to be able to get great mortgages. I'm going to be able to get better finance deals and all of this sorts of stuff. Because if you use credit to your advantage, loans and mortgages and bridging finance, then you can really make some good money. As long as you calculate it right, of course. So then I made a mistake. And this is a lesson that I learned very quickly and I'll never do again. I bought something. It was actually a Christmas present. I bought it through PayPal, and PayPal said, oh, you could have this on credit and just pay it off over 3 months. So I thought, okay, I'll do that. So I paid that on PayPal credit, and then with the agreement, I was just going to pay it off over 3 months. I like the idea of that. It saves cash flow. It's, you know, all of this. So I did that, assuming that PayPal would take that payment from the cards that they have registered on their system, but they don't. I think PayPal Credit and normal PayPal are 2 separate entities, and they didn't talk to each other. They didn't communicate or anything like that or link up. So the first payment that I was due to make on that PayPal Credit, bearing in mind I had the money, I had no problems there, but the first payment was missed. They sent me a letter saying, you've missed your payment, you need to make this payment now. And I looked at that and I was like, okay. So I called them and they said, yeah, we don't take the payment from your card. So that hit my credit rating again, because now all of a sudden it's showing that I'm having difficulty making payments. Even though that's false, it's showing that I had difficulty making payments. So the lesson I want to pass on to you about that is, it's not just about having money in the bank. It's not just about keeping up with your debt levels and, you know, paying off debts and things like that. It's also about how you conduct your payments. So I set up the payment with PayPal. That's all sorted, no problem since, but that knocked my credit rating down quite considerably. I started going down to, I think it was something like 485, 480 out of 600, which is still miles better than it was, but it took a hit. And then, I had to then work it back up again. So I carried on with my normal process. I still do it now, by the way. I use my credit card for little tiny bits and pieces here and there, and I pay it off a couple of times a week now. And then my credit rating went straight back up. And that's why I'm doing this, because I figured, well, if you're trying to get into property investing or anything really, business too, it helps in business, especially if you're trying to get any kind of accounts, credit accounts, supplier accounts, anything like that. They'll look at you as the director and check your credit rating. For some reason, this is trying to reconnect. Hope you're still with me on Facebook, which is there. Anyway, so I then learned another lesson, which I want to share with you again, especially if you're getting into property investing and things like that. My credit rating went straight back up. That's when I started getting into property investment for myself. And this is now going back about 3 years or something like that. Bear in mind, for the last 20 odd years, I've been investing for clients, no problem. But now I'm doing it for myself. So start getting credit checks done on me by mortgage lenders. Fine. Now, because I went for a load of different mortgage products, I had a load of different credit checks done on me. And then my credit rating went straight back down again, because what it's looking at is, how desperate am I for funds? According to my credit report, I'm crying out for lending and support because I'm getting so many credit checks done. So that has an effect. And the interpretation of the credit referencing agencies there is that, right, Tom must be having difficulty because he's desperately trying to get loans and lending and funding and credit and stuff. Well, that wasn't true, because I was just actually trying to invest rather than get out of any trouble. So I've got a few tips here about how your credit rating is affected. And I think that everybody, especially if you want to start investing, I think everybody needs to pay close attention to how this all works. Now, first of all, there's your credit cards, right? And if you've got a credit card, then you probably use it. You probably buy big things on it. Maybe you stick a holiday on it in order to pay it off over time. Fine. As long as you know what interest rates you're paying and you've accounted for that, then fine. That's up to you. But here's my advice. Keep your credit card usage to below 20% of the limit. If you keep it to below 20% of the limit, and then constantly pay it off, constantly get it down, and then you can use it again, get it down, then use it again, get it down, you can use it again, make more than just your standard monthly payment, then that goes for you. According to the credit referencing agencies, they look at that as favorable, and they think that you know what you're doing. You know how to manage your debt. You're not required. You don't need loads of bailing out or anything like that. So keep that credit card below 20% of the limit. That's a really good piece of advice. And it works wonders. It ramps your credit rating up to the top. You might think you've got a good credit rating right now, but trust me, you do this, you start paying off that credit card a couple of times a week, you'll hit that ceiling of credit rating. I promise you that. Constantly pay off your credit cards and your other sort of, if you've got store cards, that's what I'm trying to think of, store cards. You've got store cards, use them, fine, pay them off straight away. A lot of these store cards offer interest-free periods. So, for an example, if you take a store card and you spend on that store card, they might not charge you interest until 28 days after you've spent the money. So just pay it off before then. It ramps your rating up here, and it really is quite satisfying as well in a weird way to pay off your debts like that. The next thing I want to tell you is to keep your credit checks to a minimum. Now, here's a little warning in here. A lot of brokers of things. So, for an example, if you go to, if you want to get a mortgage and you get a credit check done by Barclays, a credit check done by Halifax, a credit check done by this company, that company, that company, then the credit referencing agency will mark you down for that. So try and be a bit mindful about who is doing a credit check and when. Be mindful of how many credit checks are going to be done. And I'll give you another example. If you go and get a car if you take a lease vehicle for yourself, then the lease car broker will be doing a few credit checks on you because they all have different suppliers, right? So make sure you know how many credit checks are going to be done, who's doing that credit check, and try and spread it out over time. And don't let loads of credit checks be done on you at one time. Next, like I said earlier on, keep a reasonable amount of money in your bank account at the end of each month. Now, if you're currently trying to build your finances and you're currently trying to grow and you are living month to month, I know that's tough. I've been there, but try it. Even if it starts off with leaving 500 quid in the account, 1,000 quid in the account, just leave it in there so that the banks record, and bear in mind, it's all electronic. So you're just playing a game here. The bank will recognize that you're not struggling at the end of each month for money. Stick a little bit of money in an ISA as well, or open a savings account of some kind and stick a little bit in there and just keep putting little tiny bits in every now and again. Now, again, remember, it's all electronic nowadays. So if you just keep putting little bits of money, little bits of money, little bits of money into a savings account electronically, and your digital avatar, if you like, looks like you know what you're doing with your money. You're moving it around into the right places to keep your security. And that's what these credit referencing agencies are checking for. They're looking to give advice to people on how secure is this person to lend to. Now, I've still got a long way to go. I've still got to build up my overall business rating as well. So I'm going to keep doing this and keep doing this and keep doing this until I hit that ceiling of I can't get any better. That's the plan. Don't use your overdraft. Now, here's another little lesson I learned. So I have 2 bank accounts, and one bank account has an overdraft on it. The other one I just don't bother with. I don't have any kind of lending, but one bank account has an overdraft. So I decided to use that to try out this same technique. So I don't have any money going into that account or anything. I just use it as kind of an expense account. And I started just briefly using the overdraft, paying it off, overdraft, paying it off, overdraft, paying it off. Now, I know that does accumulate a little bit of interest, so I was trying to calculate it correctly, but that didn't do so well. That knocked me down a few points. So don't use your overdraft. If you can, get rid of your overdraft because you don't need it unless you do need it. Pay off your credit agreements early. So if you've got, say, a television on finance or a sofa on finance or something like that, if you pay it off before the end of the agreement, that is a big tick box for the credit referencing agencies. And obviously, throughout all of this, maintain your monthly payments for everything. Now, look, I promise you, if you do those things, your credit rating will rise. Do things like use your credit card or even a whatever card, but pay it off, pay it off, pay it off, constantly pay it off. That will ramp up your rating for sure. And I treat this like a bit of a game now. And I want to find out if anybody else does things like this to improve their credit rating. Let me know. Pop a comment in here and let me know if you're working on your credit rating, if that's important to you. But what does it get you? Well, look, if you're investing in property, and I'm going to say property, business, other investing, life, this is a really positive thing for you to have. If you're investing in property and you've got a really tip-top credit score, then mortgage lenders are going to give you the best rates. And that means you can save money on your expenditure and you can make more profits from the property. Pay it off in full. Hi, Izzy. Yeah, exactly. So what I tend to do with my credit card is so basically Izzy's just asked, hi, Tom, do you pay it off in full? That's what your question is, I presume, Izzy. But yeah, so what I do is I use my credit card. Doesn't matter whether it goes up to £10 or £200, I just pay it all straight off. 2 or 3 times a week I do that. But I make sure that my credit card never goes above, for me, it's about 10%. I never go above about 10% of the limit. Just purely because that means the referencing agencies will see that as he knows how to conduct his finances. He's not desperate for debt and credit and so on. So I hope that helps, Izzy. Definitely. Yeah, I can certainly help you look into yours, Lee. Definitely. Just tell you what, I do offer something called a discovery call. And it is quite literally what it sounds like, in that we have a 15 or 30 minute chat. Sometimes it's more because I do like to waffle. 15, 30 minute chat where you can use that for whatever you want. You can ask for advice. I can help you with anything you want help with on that call. And also it's a chance for me to discover what your issues are and your challenges are so that I can create more of this stuff for other people. Anyway, back to what I was saying. Now, right now, you'll get, if you do increase your credit rating to a top level, you get better mortgage deals, like I say, you get better finance for bridging finance, and you get better credit card rates, you get better loan rates, you get all of this lending that can help you increase your profits. You have access to better stuff, but there's more. If you're a business person, you get better supplier accounts, you get better loan accounts. Everything to do with business is better. So your credit rating is very important. And now I treat it like a game. And if you can do the same, what I do is I kind of just, now it becomes a bit habitual. Every time I spend some money on my credit card, it goes up here and I think, oh, I've got to pay that off. See if I can get my credit rating up another point. And now I'm at the level where my credit rating's up here somewhere. So it's really difficult to push it up any higher. So every point now is precious. If I go up 1 point, I'm celebrating that night. Or maybe not, it's a bit geeky. But what I would suggest to you, if you're watching this and you want to improve your credit rating, is sign up for Equifax or Experian. Now, I've tried them both. I prefer Equifax. Now, it does cost a few quid a month, but I tell you what I've gained from having that facility is miles better, because I like the Equifax one because it gives me more detail. It gives me more payment history information and just much more detail. So Equifax is my favorite one. I don't get paid to promote that, by the way. Just use which one you feel best with. But yeah. But then I look at that 3 or 4 times a week now. And if my credit rating drops down a point, it's a personal challenge for me to jump on it and get straight back up a point. Now, I don't know if it's possible to hit the top level. And here is a quick warning, by the way. If you sign up for Equifax or Experian, then at the beginning, your credit rating will seem to be super high. But that's because it takes time for Equifax and Experian to build all the data from you. So you put in all your previous addresses, all your accounts, all your credit accounts, everything. And then over time, what will happen is your Experian is a prime example. You jump onto Experian, your credit rating's right at the top. And thanks for everyone, by the way. I'm getting absolutely battered here with likes and love hearts and all that sort of stuff. So thank you very much for everybody that's smashing those like buttons. Anyway, Experian, when I first registered for it, I was literally $9.99, and I thought, whoa, amazing. But then over time, it starts to become real. I'd probably allow a good few months for that to show you your real credit score and rating. So that's basically it. And just as a very brief recap, look, I told you my story about how I went from an absolutely terrible credit rating. It's my fault for starting a bloody business. How I got my credit rating right up to as high as it can be, and then what the reasons were for it to come shooting back down again. Well, not shooting, but a bit. It came back down a bit. What I did to get it up to the top, and then what I did to keep it at the top. My credit rating is now very good. It has taken a little bit of a battering very recently, but that's because, as I've been sharing, I'm buying 4 properties, 4 properties in Newcastle. I'm buying 4 properties in Wales. So I've taken quite a few credit scoring checks at the moment. So look, I hope all that helps. Now, don't forget, if you want to book a discovery call with me, it's totally free. I love them. It's literally just an opportunity for you to have a 30-minute call with me. You can ask what advice, anything you want to know about property investing. I'll help with business if I can. I'll help with investing if I can. Any advice I can give you, it will all be based on my opinion. It'll all be my perspective and my tips and stories. So if you want something like that, you can just drop me a message through Facebook, or you can send me an email, as always, tom@pinkstreet.co.uk. But don't forget to check out the podcast as well. The podcast is rocketing. I'm absolutely surprised and astonished. I've been doing a podcast for about 3 months, and it's taking off. So I must be doing something right. I hope I am anyway. Now, this credit scoring strategy is just another way for you to be the best version of yourself that you could possibly be. And remember, if you want to be the best version of yourself at one thing, then you've got to be the best version of yourself at everything. And here's my sign off. And I hope you'll all join me in saying, My name's Tom Soane, and this is the Anonymous Landlord.